Well, that was an exciting Q1 in the greater Seattle housing market. I am Veronica Morss, your Seattle and Eastside real estate expert, and I am here to give a roundup of the Q1 numbers and projections and forecasts of what we might see in the next quarter. Now, we came off of a pretty slow winter, so January was still lagging a little bit, but we really saw the market start to thrive in February and March. If you recall, the Seattle spring market does start a little early, so there was no surprise there. Now, for this video, I'm going to talk mostly about single-family homes. I'm going to mostly talk about King County just to make it even across the board. Our condo market is still just kind of having some troubles, and it really skews the numbers because the single-family homes are where things are thriving right now. So we're going to talk about that. I'm going to quickly go into what happened March with just average sales prices because this is where our spring market has really starting to thrive. In King County single-family homes, the March average sales price for all those about 1.27, and it significantly, went up each month, which is great to see. In Snohomish, we're about 880, so if you go into comparison, that's what we're seeing. In Q1 in general, we saw progressive numbers each month. Higher average sales price, more homes for sale, and more pending sales. So all good things and all pretty much expected considering the time of year. Now, the days on market, you'll see a significant increase and drop in those. We started off in January, for kind of King County as a whole, single family homes. We were at 31 days in January, and then we jumped to 7 in February, and then we're at 6 in March. And so I'm sorry, that was for the median days on market. So we saw what happened. And when we say days on market significantly go down, that 5 to 6 days, that means that the offer review dates are working. Most times the homes come on market on a Thursday, and then we have an offer review date, Monday or Tuesday, and that's where that days on market comes from. So that's kind of what we're seeing here. And speaking of days on market, I wanted to talk more so about price points in this video because that is where things are so different. All right. We're looking at about $1 million, when you're looking at $1 million, $1.5 million and below, that is where things are moving, which we've seen over the past years. Those first-time home buyers, yes, those are first-time home buyers in the greater Seattle market. They're out there and they are putting in multiple offers. They are really raising those prices. So we are seeing essentially at each tier of price point, the numbers are very skewed. So that's why I wanted to dig a little bit deeper of what we're seeing on each price point, and so that we can better assess of what your particular property might be doing. All right, so let's just say easy numbers, below 2 million, things are moving quickly. All right, I just went under a multiple offer scenario on a $1 million property. It had 19 offers, and this was just a couple days ago. Had 19 offers, and it was selling at listed at 1, and it went 30% above list price at 1.3 something. They didn't share the exact number. So we're still seeing a very big interest in that. The interest rate drop because of the volatile market definitely helped, but I think anything really below the 7s, people are finally getting out there. That's reality. So that's where we're seeing a lot of increase in more offers and in that $1 million first-time home buyer price points. Okay. Now, when we get to 2 million, 3 million, 4 million and above, this is where we're seeing just a little bit different numbers. In the Seattle market, those prices, they're not relying really a lot on the interest rates. They are relying heavily on their stocks. And also what happened in, the last couple of weeks, if you probably noticed, is that our stocks have taken, a tumble. And so with the volatility of that, I've seen those particular price points really above 2.5, 3 million. Those are the ones that are being a little bit more slow, but they are still moving. So we're going to talk about each price point with days on market because I think that's going to help. Now, again, $1 million, $1.5 million, we're seeing quick 6-day days on market because they're doing the offer or list to offer review date. When I looked at $2 million to $3 million homes, it was still a pretty steady decline on days on market throughout the quarter. In March, we had our average days on market sitting at 16. So not bad, comparing it to 6 otherwise if you're, below 2 million or so. Now in the $3 to $4 million market, We had actually had an increase in March to 30 days. So what we have seen decline for most of the other price points, in that 3 to 4 million, we just saw an increase to 30 days on market just for this last month, up from February. Again, we saw a lot of volatility in March, I think, with the stocks and everything else. That's probably why. And then the $4 million and above price point, we actually saw less days on that did not decline or increase, in March. We actually saw the opposite, but their days on market are still longer than the rest of those price points. We saw a decline in February, but then we saw a big increase in March to about 45 days average days on market for about $4 million and above. But it depends on the property. I mean, I look around and I'm seeing what's happening in Kirkland. I saw a $6.5 million property go within 2 days. I've seen other properties in those price points sit for 200 days in other markets. So it really just depends. The list to sales price ratio is something that I really like to keep an eye on. Again, when we're talking about the price points that are really hot and heavy right now and that $1.5 million under, that average list to sales price ratio is about 102.7%, and that was just of March in 2025. So on average, homes are going like almost 3% over list price. Now, when we look at the other price points, we're still seeing a good amount of homes go for 100. There's a few that go over, but I just did a deep dive into what that looks like for $4 million and above. So if you're over here thinking, hey, I'm $4 million and above, I'm sitting on more days on market, I probably have more opportunity to get, a lesser list price. Well, it could be correct, but there's still a lot of homes that are going at 100, a little bit over. And I'd say the majority of homes sold in Q1 above the $4 million mark, I was seeing that, we're looking at about 95% of list price, 92% of list price was kind of the average there. So that's what I've got for you in regards to these different price points of what happened in Q1. As a summary, I will just say, hey, the market is still going, whatever happens in the world, and people are still looking for homes out there. Just people have different ways of financing it and different needs. So again, the multi-million-dollar price points, if the stocks are down, we have seen a little bit more of a slowdown with that. But if interest rates are going down on the other side, then we're seeing a lot of first-time home buyers get out. And we just really anticipate, or we really hope that those interest rates keep dropping a little bit, just because we do feel that we're still really tight on inventory. And if that, I believe the magic number is, 5.5, 6, I don't think we'll get there this year. But if that's the number that sellers will finally move at, then that's going to open up a lot of inventory. But we're still figuring out this inventory crisis. And going into the forecast of, hey, what our interest rates are supposed to do, we don't know. I wish I had a crystal ball. But I will say that a consensus of the experts, economists, they believe that, we're going to probably be sitting on average about 6.5 most of the year. So we saw a huge, it was very volatile this last week. We saw things jump from 6.5 to 6.85 to back down, and it's been very volatile in the market. But I think that once things smooth out, we're still just going to see that very slow coasting of about a 6.5. So buyers are getting more and more used to this, which means that more and more are coming out to play. So we still need more homes on the market. And as for the higher price points, as long as, it's those stocks that are going to really drive that market. And then, of course, if interest rates drop and stocks are also on a high, then that's going to create a frenzy in that one as well. So I am looking forward to a Q2 that's probably going to be, wild for the first little bit and maybe slow down towards the end. In Seattle, in the greater Seattle market, our spring market tends to kind of slow down after Memorial Day for a tad bit. Depends on the property, but our summers are very hit and miss. Up until about August, it slows down. So if you have been thinking of moving or contemplating whether it's the right move or not, we will always let you know what's best for you and your situation. And I look forward to helping you in Q2.